There's my dramatic YouTuber intro. Whenever they have something serious to say, they always go, we need to talk, and they look dead in the camera, right? So this video is about market manipulation. So typically when you watch my videos, it's very structured. You know, I'm in front of the whiteboard. I typically have an outline of the video, major talking points, and I present those talking points in a very structured format. This video is going to be a little bit different because it's just going to be me kind of riffing off the top of my head. The format of this video is going to be the first half. I want to give you my perspective on the financial system and markets in general, and we're going to talk about the market manipulation that's going on with AMC, with Nokia, with GameStop, all the stuff that you're tuning into for in this video. And I'm going to do that in the second half of the video through a lot of good tweets that I've been reading this week. So to give you my perspective on the market and to let you know where I'm coming from, I got to tell you my background very quickly. So I'm 33 years old. I've been investing since I was 18. That's senior year of high school in 2006. Started with a Trade King account, $4.95 a trade, blah, 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 blah. I started to mature a little bit when I got my finance degree in 2010, and throughout my journey of being in college from 06 to 2010, you start to get away from like the individual stocks that you really don't know why you're buying them in the first place. Like, I was a kid. I didn't know what I was doing. I was 18. I'm like your typical retail investor right now. I own Nike soccer cleats. I'm going to buy Nike. I own an iPod. I'm going to buy Apple stock, right? We typically gravitate towards things that we're comfortable with and know and use in our everyday lives, and that's typically the stocks we end up buying. Right? So I had my fun, did all that, graduated more towards value investing, passive investing, ETFs, index funds, things like that. But what was a huge wake-up call for me was in 2008 when my portfolio took a crap after the great financial crisis. I was down like 30, 40, 50% in a matter of weeks, right? So I started to wonder, what really caused this? I thought I was doing all the right things and investing in sound investments, passive investing. I still had my individual stocks. Why did my portfolio take a crap, So I went down the rabbit hole of really understanding, like, what is money? What is monetary policy? Where does money come from? I'm learning about finance from the corporate finance side and also from the personal finance side because I wanted to be a financial advisor when I graduated. But I never really even gave it a second thought of understanding what is money and what are these stock markets in general. I thought it was just a buyer, a seller, there's a broker that connects the two, and that's it, right? Well, then you start learning about, hedge funds, institutional money, private equity, all this good stuff, mergers and acquisitions, IPOs, all that stuff. So in 2008, I went down the rabbit hole of understanding how the great financial crisis was started in the first place, because you have to realize this didn't just affect retail investors. This affected municipalities. This affected sovereign wealth funds. This affected institutional investors. This affected cities whose pension fund was tied up in all these dog crap products that Wall Street was selling and bundling up, right? So that led me down the rabbit hole of the 2008 financial crisis when they took commercial mortgage-backed securities, CMBS, they bundled them up. They made these sausages of these financial products. They took all these crappy mortgages that they knew were not investment grade whatsoever, and they sold it to these people that I'm talking about now, and they destroyed pension funds. They destroyed people's retirements. They destroyed municipalities and cities and public workers' salaries, and this happened all across the world. This wasn't just set to the United States, right? And guess how many people went to jail after that? Basically no one. That's the answer. And not only that, you had all these hedge funds or these institutional investors and all these Wall Street companies such as Goldman Sachs, Lehman Brothers, stuff like that. Well, Lehman Brothers didn't get bailed out, but not only that, they got bailed out for the most part. The CEOs got bonuses and it was business as usual, right? And to me, that was a big light bulb moment in my head trying to understand, how did this happen, right? And it always goes back to that theme of like too big to fail. A lot of these companies truly are too big to fail, but what that does is that takes that privatizes gains and socializes losses. Okay, so let me repeat that. You're privatizing your gain, so when your bet pays off, you get to buy another house in the Hamptons, you get to take your helicopter to Martha's Vineyard, you get to take your third yacht, sailing across the Atlantic Pacific Ocean or in the Caribbean, right? And you're living kind of like that Wolf of Wall Street lifestyle, which is great. But when you have losses, they're socialized. So guess who bailed out all these companies and all these businesses in 2008, up to throughout Obama's presidency? That was the taxpayer, right? The middle class, lower class, middle, upper class, basically the 95 to 99%, right? These are the 1% that are getting bailed out. So this video is not going to turn into, Occupy Wall Street and do all that stuff, because I still am a proponent of investing in equities. I think it should be a part of everyone's pie or portfolio, which actually leads me to talking about asset allocation. So the market recently has absolutely been manipulated. So if you've been following anything that's been going on with, Wall Street Bets or Reddit, or anything that's going on with like Robinhood and a bunch of other brokers that kind of halted trading for certain securities, certain equities, certain stocks, in my opinion, that's 110% market manipulation. So the gist of it is that I'll just use as an example, right? So I bought AMC. I personally held AMC. I can show you. I can pull up the screenshot. I kind of don't want to do it right now in the middle of this video, but I held AMC. I bought it for like $4.73 a share. Bought $1,000 worth just to play around a little bit, throw my money into some of these spec trades, and it went up tremendously. It went up like 300-400%, right? So I tried selling it. The order couldn't get filled. A lot of volatility, a lot of volume. I understand that. Okay, you can't fault these brokers for that, even though you kind of can. But my point is that's not the problem. The issue is, fast forward to today at the time of this recording, when I went to AMC, when I went to go search it, at least on and a couple other traders, other brokers as well, they wouldn't even show it. It wouldn't even show up. You don't see AMC. You don't see Nokia. You don't see GameStop, for example. That's the one that really set this whole thing off. They didn't even want you to see it. However, since I had it in my portfolio, I was able to still view it, and I was still able to sell it. Keyword: sell it. I was not able to buy anymore. I was not able to buy AMC. I was not able to buy Nokia. I was not able to buy GameStop. Okay, I didn't have GameStop in my portfolio, but I did have AMC and Nokia. So to me, right there, why they halted that is that message had to have come from higher up, right? I'm not making any accusations or anything like that. I'm just giving you my play-by-play experience of my own portfolio. So when you're allowing someone to sell an equity or sell a security, but you're not allowing the same people to buy them or even discover it in this case, in my opinion, that's market manipulation. So why is that? Well, if you're selling something, obviously you're driving the price lower because there's going to be more sellers than buyers. Now, if you're able to buy it, that's typically how a stock, well, for the simplicity of this video, that's how stocks go up, right? There's typically more buyers than sellers. There's more demand for something driving the price up. There's more factors to that, but just for this video. So when you are only enabling users to sell something, of course the price is going to go down. So if you followed today, the time of this recording is January 28th, right around 2 p.m. Eastern time. If you just looked at the chart of AMC, you weren't able to buy it today at all, so it only went down, right? What this allowed the hedge funds to do was to actually play catch up, re-strategize, and figure out what they want to do moving forward, not only with their options positions that they already locked in, but just their strategy moving forward. So there's a big, kind of like run on the banks, even though it was really more towards the hedge funds and the bigger dogs in the industry. Now, I'm going to share something real quick here, which I'm going to get into the second half of this video. So you can actually understand what's been going on today, and you can see why a lot of people have been very angry. So this is one of the things that kind of angers me as a retail investor. You have to realize my parents are immigrants. I'm not some silver spoon kid. I didn't grow up, rich or anything like that. I started my life how most people watching this video started their life, without a lot of advantages, if you will. So when I see stuff like this, like the NASDAQ CEO, Friedman, says the exchange will halt trading in a stock if they link unusual activity to social media chatter, like, to me, that's not fair, right? That's basically saying, like, we're going to halt trading to let our buddies, the big institutional firms who are getting crushed right now, getting short squeezed, because that's essentially what's happening. We're going to allow them to play catch up and allow them to kind of re-strategize and allow them to have extra time on the clock to make up for the decisions that they've been made, or that they've made earlier, when they open up these positions against GameStop, for example, against AMC, et cetera, et cetera. So that goes back to my point of kind of gains are privatized, losses are socialized. That's another form of that. So if I go to Twitter here, this is the stuff that I've been liking over the course of the past 2 days, and maybe this will shed some more light on how I feel about this. You can see here that Jordan Schachtel said, today hedge funds called in favors to have trading shut down for specific companies across several giant platforms so they could buy time to gather in private to decide what to do next. If that's not market manipulation, I don't know what is. You can see here freezing cold finance takes. This is a hilarious account on Twitter. So you can see here that says in 2016 from March, Robinhood says, let the people trade. And then you can see freezing cold finance takes say, oh, really? And then over here, we have board Elon Musk. The way to fix capitalism is with capitalism. So I know this is probably going to not agree with or not sit well with some people, but you have to realize right now we don't have free market capitalism in this country. We have kleptocracy, we have crony capitalism, and we have helping your buddy out by getting him close to the fiat money spigot. So I'm from Cleveland. I use the word spigot. So you know the thing that you tie your hose into where the water comes out of, like in your garage or whatever, that's a spigot. The closer you are to the fiat money spigot, that's basically going to determine your wealth throughout life. If you're a politician, if you work on Wall Street, if you have insider knowledge and you're kind of just gaming the system, that's being close to the fiat spigot, in my opinion. So what I believe in is free market capitalism, to where there's a buyer, seller. You're allowed to have businesses fail when they take on too much risk. You're allowed to have businesses prosper when they properly manage their funds. So I'm a big believer in free market capitalism, but that's not the case, and that's kind of what this tweet indicates. The next one is the SEC is about to ban outsider trading. So without this video getting too serious, trying to bring some kind of light back into it, this is a satire tweet, meaning that typically you're banning insider trading, so you can't benefit off of knowledge that you have from the inside. They're actually banning outsider trading, meaning that I couldn't buy more shares of AMC if I wanted to. So I thought that this was pretty funny. And then finally, last couple tweets here, we have Robert Reich saying, if Redditors rallying GameStop is unacceptable market manipulation, what would you call it when greedy Wall Street bankers gambled away our entire economy in 2008 and faced no consequences? That's actually called, you can see your boy right here, that's actually called the Cantillon effect, or if you're like French, the Cantillon effect. For those of you that don't understand what the Cantillon effect is that it basically, to summarize it, it's being close to that fiat monetary spigot and why Wall Street is too big to fail. So I highly advise you to check out the Cantillon effect and learn about it and research it. It's just outside the scope of this video. That's why I don't want to talk about it. And then finally, to leave the video on a funny note, this person said, I know this GameStop stuff is funny, but you have to remember that this is hurting real people who own multiple boats. I thought that was pretty hilarious. So I know that most of you came here for, a deep analysis on what's going on with GameStop and Nokia and all this stuff. To be quite honest with you, I'm just being real with you. I'm always real with my audience. I try to provide value in every single video that I make. I'm just exhausted. I've been living this for like 72 hours now, just digging super deep. It's just too many layers of the onion to peel back. It would end up being like a freaking documentary. So I just wanted to give you a quick perspective on my thoughts on the market. I do believe that the actions taken by these brokerages were absolutely market manipulation. Where those shots are being called, if it's them internally or if it's from a higher up, who knows? I'm not going to turn this into a conspiracy theory video, but just so you know, my perspective as a millennial. I couldn't get a job after I graduated with a finance degree in 2010. I had to sell cars, and that's because of the 2008 great financial crisis, because of the actions of Wall Street. It's kind of like we're seeing here. So this is like a mini, this isn't even a blip on the radar compared to 2008, but my point is that the principles are the same, the bad actors are the same, the holier than thou mentality is still the same. And then also the sociopathy. I worked on Wall Street. I worked in commercial real estate. I worked with CMBS, dude. I worked with commercial mortgage-backed securities. I worked with life companies. I work with guys that have the New York, signature in their email address that are sitting on the, 50th floor of a building in Manhattan, right? A lot of these guys, to be quite honest, are sociopaths. And I hate to say that, but it's the truth. All they care about is money. All they care about is profits. And at some point, I'm trying to teach you to be better than that. Money is a piece of the puzzle. It shouldn't be the whole puzzle. And I understand that people, they couldn't get out of their trades because of the actions of these brokerages, and I get that. And trust me, I'm one of them. But at the end of the day, you have to realize, guys, there's more to life than just money. And if anything resonates from this video, I really hope it's that. You really have to care about your time and your health are the most important. And then you can start to worry about pieces of your financial puzzle. So I know it wasn't what you were expecting. I hope I didn't ramble too much, and I hope it was entertaining and you got value from it. As always, hit the like button, share the video if you'd like, but this is something that I hold dear to my heart. So just remember, guys, asset allocation, time, health, family, friends, be a good neighbor, all that good stuff. Thank you very much.